Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks just like yourself in higher education get the most out of those higher ed retirement plans, typically around those confusing TIAA accounts. This video is no exception. Okay, folks. By the way, if you caught my last video, I explained I'm dressed the same. Day after Christmas here, I'm in the office. I'm the only one in the building to be exact. But you all have reached out to me over the holiday weekend. I'm guessing you had some time on your hands, maybe a little bored sitting at home. Parsed through my videos and podcast alike and shot some questions, comments out to me. Um, so with that being said, I'd say the number one question, comment that arose from the holiday weekend, the guaranteed component of TIAA Traditional. So I'm going to get into that here. I say real quick. So I'm going to fumble through my words here. Hang with me, okay, as I try to verbally explain this and probably confuse yourself and me at the same time. So with that being said, I think the simplest way to do this is have nothing planned out or anything. Just use a hypothetical, okay? So right now, obviously, TIAA Traditional. I'm going to say traditional going forward here for the sake of the tongue twister. So traditional right now, December of 2023, liquid account, RCP, getting 6.25% for new monies going in. Now, let's preface this. The guaranteed component of that, I'm not sure exactly what it is, but I'm pretty sure it's 3%, but don't take my word for that. But for the hypothetical here, we're going to use that number. So the guaranteed component of a new deposit going in, let's say you put in $20,000 today. We got 3% on the guaranteed, but it's getting you 6.25, right? So 6.25 minus 3 is 3.25%. So that 3.25% is the additional amount, right? Okay. So we're good with that. $20,000 goes in, you're getting 6.25% on that money. Come next month, they're going to adjust that rate for new deposits going in at that time. They might keep it the same, might lower it, might raise it. Okay, but that's on a monthly basis. Now, when March comes around in 2024, the board, they're going to gather around this big table. That's just how I envision them. And they're going to yay or nay, whatever the case is, how they do it. They're going to say, they're going to look back, okay, on the money that we put in today, the 20,000, that 6.25%, getting that 3.25 additional amount. They're going to say, okay, that person, I'm simplifying here, that person that put in that money, $20,000 on December 26th, getting that 3.25 additional amount, do we want to keep that at 3.25%? Do we want to lower that, or do we want to raise that? Okay, yay or nay, right? And then move on to whatever is next. So the additional amounts between March and March, right? March 1st, those amounts can be adjusted at the March following, okay, in this case, March of 2024, all right, for those monies that were put in, right? Now, TIAA is a very conservative company. They have billions of dollars in reserves. They are a very solvent company. This is not their first rodeo. They've been around a long time. So what I'm getting at is imagine, okay, conceptually, everyone can think about this. These folks, the board sitting around this table, if, again, using today's hypothetical, they were to adjust today's deposit that we put in for $20,000, that 3.25 additional amount, remember that 3% ain't changing. It's just that 3.25%. They have the ability, this caveat, this out, to lower or even raise it, okay? So if they were to lower it, sorry, there's my email, from 3.25 to 3, okay? Think about all the logistical administrative nightmare that it will ensue because they have to adjust lifetime income benefits for contracts already in place as well. Okay, so they don't want to do that. Okay, it's also a bad PR kind of thing, right? So they go into it with the conservative approach to begin with. Do you think TIAA wants to adjust that 3.25, again, today's hypothetical, that 3.25 additional amount down to 3? Of course not. So they do go into it with conservative, we'll call it math here, on that rate because they are not in the business, never have been, of trying to readjust that. They're not looking to garner all these assets and kind of hoodwink a lot of folks and then lower that rate. Okay, now when you call TIAA, I've done it many times. If you look, you try to Google it or whatever, do research and trying to figure out, historically speaking, what's their track record of come March 1st of the following year of them readjusting, in this case, that 3.25% down to 3. Nobody, you can't find this information out. At least nobody online, I'm pointing at my phone, will tell you because they don't know. You can't Google it, but I will tell you this. I've been doing this a long time. I've never seen it where they've done that. Okay. Now that's not to say they can't, but I'm just telling you, they're not in the business of doing that. Okay. They don't want to do that. All right. So with that being said, utilize these TIAA traditional accounts for longevity purposes. And also, by the way, with these high interest rate environment, if they did lower, hypothetically, if March did roll around and they went from the additional amount 3.25% to 3%, well, 3 plus 3 is 6. I put in $20,000 today. You're getting 6% on that money. Okay, but TIAA does have that ability. Now, also, again, I'm going long-winded here. Typically, what I've heard, seen, is that they will, using the hypothetical that I was using, the $20,000 we put in today, instead of them readjusting that additional amount of 3.25%, they're going to look back on historical buckets years ago and readjust those or converge those buckets first before they do the one that you just put in or we just put in, $20,000 today. I hope this makes sense. It is a very confusing. There's a lot of nuances with this TIAA traditional when it comes to that guaranteed component, but I want to make sure I tried my best to clarify this. Anyway, I hope that makes sense. If you have any questions, comments, by all means, reach out to me. Greg Shepard here, S&A Financial Services. I hope it didn't confuse you even more. All right. You all take care. All right. Bye-bye.